Yo guys, welcome back to Stock Talk Insider. So today I want to give you a transparent look into my personal portfolio as we move closer to the end of this year 2025. I'll break down my holdings, the gains so far, and then we'll dive into one of my largest positions, AMD, and why I still believe that this is one of the strongest investments that I will ever make till this day. So it is a strong investment going forward. All in one. So let's get into it. And I do wanna start, as said before, with the portfolio overview. That's part one of this video. So my total portfolio value right now is 58,131 euros. That is around, I don't know, maybe $65,000. So that includes both my stocks and my cash. Out of that, my all-time profit is, including closed positions, 24,217 euros. That's roughly a 71% return on investment since exactly 2 years ago when I started with investing on the market. So, which I'm really happy with, of course, so far, because that's a very nice return. Now let's talk about the breakdown, about the stocks we have and my current positions. So AMD worth 22,703 euros with a profit of around and about 3,106 euros. That is a massive position and makes up close to 40% of my portfolio. I do know that. Amazon sitting at 1,360 euros, very small position. Profit of 259 euros, a smaller stake but still a steady grower, which I want to buy way more of. 7 shares is literally nothing compared to what I want in the stock. I really want to put this on a long term to but the one thing is that I want to put it to a position of between 8 and 10,000. But of course, on the other hand, I'm scared that I don't have enough time to profit from the best of the growth of Amazon if I want to do that. But still, that is one of my biggest wishes in the portfolio, to make Amazon a way bigger position than it is now. I want to really make it a middleweight in the portfolio and not a small low weight. So we have also Elf Beauty valued at the third biggest position, still way below the second biggest, which is valued at 4,381 euros, profit of almost 1,000 euros. This gives me some exposure outside of tech, of course. So yeah, going forward, we also have Fortinet at 1,086 euros. Also a very small position, of course, almost flat with a small profit of 25 euros. But in the long term, I do think that they will nicely return to their highs of around $106, $110, because the company is actually very steady. There's just some uncertainty, but still very steady. The Honest company, which stands at 2,218 euros with a profit of 100 euros. A consumer goods play, and it is one of the very small caps in this position, in the portfolio, I mean. I really believe in the story of Honest. Maybe the business model isn't that exciting. It's maybe more seen as a more, more boring kind of business, but still it is a nice niche company, and the way they're executing and got out of the slacky years, they've really performed very well, and they're doing almost $100 million each quarter in revenue, which is almost $400 million. If you know that they go between 450 and 550 million in market cap, that's very big if you look at those numbers. So because of that, I do believe that I don't think that they should immediately go over 1 billion market cap, but going to 700-800 million in market cap is a very possible thing for Honest, and in my opinion, that should be very fair for the performance they give. They are at this point going more on the basis of the company, so structuring very stable financial statements. Before actually want to market in growth and all of those things, they do want to layer their fundamentals and make a very good base as a company. So Going further with Shopify, which stands at 1,587 euros with a profit of 305 euros. Small but promising position in e-commerce. It's like the position I always want at the back of the portfolio. In a nice position, not too big, just a nice position, because I know that this company will do very well because a lot of shops are used by Shopify. Also, I do look at Shopify as a more, how do you say it, Amazon kind of business. Of course, it's literally almost not actually the same, but still it is actually. It's just how you look at it, but they are still doing their growth years, and I do think that by 27, 28, 29, they'll go into their maturing years and do like big buybacks of the share account. And at this point you don't see some buybacks or something, so that's not the thing you invest in it for, but I do invest that in it for the big growth acceleration going into the coming years, the chance of just getting revenue from all of the kind of sectors they are doing their e-commerce in, and they're literally not only e-commerce brand anymore, but they are literally becoming a nice hole-in-one commerce business. So yeah, Shopify really doing great things. I do believe in the future of the company, but at this point I do want to keep the position at the lower side because I have other convictions that I believe in more and I'm interested in more, but I do know Shopify and I recognize Shopify for its potential and its quality, and that's why I want to respect the company and stock by buying some shares, and because I want to make some safe profits, of course, because I do look at Shopify just as I look at Amazon in how safe of an investment it is, in my honest opinion. So, having said that, we also have the second biggest position, just by 110 euros separate from each other. We do have SoFi, one of my strongest performances, worth of 22,600 euros, as said before, with a profit of 8,448 euros. AMD also stood at around 8,000 in profit, but went down, of course, because of some slacky days, which I will talk about soon. So, like AMD, this is a very heavy position, making up another 39% of my portfolio. I also keep a small amount in cash, which is a little bit too small in my opinion. I easily want to double that, but I'm not going to sell anything. I'm going to wait till end of the month and end of October, because the cash position of now is 3.5% of my total portfolio. That's not much flexibility, but I do have new capital coming in soon. So by the end of October, I'll be having another 1,000 euros from September, and also 3,000 to 4,000 euros more from October income. So that's 1 month 1,000, and then I have some money extra coming in from October. So that gives me the opportunity to give you to give the portfolio 3,000 to 4,000 euros more from the October income. That means that cash balance should rise to somewhere between 6,100 and 7,100, but probably I will be investing 2,000 to 3,000 of that, so we'll have around 2,000, 2,500 maybe extra, which, as I said before, would double nicely the cash position. In percentage terms, that's around 10 to 12% of the total portfolio if I don't buy any shares. A much healthier buffer to take advantage of market dips or to diversify further, because there are people saying that we'll have a 2018 type of end of the year market, which brings us down a lot and makes us a nice buy opportunity. But of course, that all has to play out. You never know what the market does, so keep investing like normal. If market dips higher, you need cash to buy even more than normal. If we are at all-time highs, of course, you don't buy as much as normal. So to sum it up, the portfolio has performed well, up over 24,000 euros of all-time high. It is heavily concentrated in AMD and SoFi. I'm well aware of that. A lot of people could say that don't go higher of 20 to 25% in one stake, but I believe too much in these companies, and I think that I'm very safe in where the companies stand. It's not that I'm losing money on it or something. It is stable. It's making. I have nice cost bases on the both of the positions, so I'm glad with that. So yeah. I do know that it makes almost 80% of the portfolio. I do want to mention that I'm probably not buying any SoFi anymore in the coming months to half of a year, unless we go to very low prices. For AMD, I'll probably go to around 180 shares because I do want to improve the position because of what I'm going to say next. And I do believe that we are still at the very lows of what this company will be. So I've got a small cash reserve, but now by the end of October, I'll be in a much stronger position to rebalance, diversify, and strengthen the portfolio going into 2025. And I'm never stressing if I will miss or not miss any big dips, because the cash I have, I will deploy. If I don't have enough, I don't have enough, and I'm at peace with that. I do have my positions for the long term. In 10 years, I probably have some buying opportunities in nice dips here and there, but you can't know that there will be, you can't go for that you will have every dip to profit on. You can have some dips that you will miss on. Like the last dip in April, I don't really fully have profited from that dip because I was very busy with some businesses where I had to deploy capital in, and because of that I didn't have the amount of capital I actually wanted to deploy into the market dip of April. So that's also one of my things that I experienced in my one of my first 2 years. So yeah, having said that, you can't profit on every dip. You have to have peace that you just need some cash and can deploy that where you can. So why AMD remains strong? I have 3 things. So I have this news title from, actually it's about Oracle, but we have some stance on where it stands with AMD, Broadcom, Micron, and Nvidia. We have some of why, actually probably a lot of people already know it, but I just want to mention it again, why AMD went down on some Broadcom news, and then a very nice, interesting interview that I broke down to the fullest detail. So yeah, going straight into why AMD remains a strong investment. Before we read that, we first go to the chart. So now that you have seen my portfolio breakdown, let's zoom in one of my largest positions. AMD, this stock makes up nearly 40% of my portfolio, and I want to explain why I believe it remains a strong long-term investment. Recently, AMD's CEO Lisa Su gave an interview with Fox Business, and I think her comments give us a clear picture of where the company and the industry are heading. Lisa Su described AI as, quote, the most transformational technology we ever seen in our lifetime. These are all quotations that I got out of the video that I just will give you guys right now. So you can still watch the video, and we will still watch the video probably. But she emphasized that we are still in the early stages of this journey. Think about that. If we are at the beginning of a once-in-a-lifetime technological revolution, the upside potential for companies like AMD could be massive. She also pointed out that whatever sector you think of that uses AI, there is so much demand out there, with very large order patterns across industry that can be seen of today. That means it's not just tech companies. We're talking about finance, healthcare, logistics, retails. Every sector is building AI solutions, and AMD is positioning itself right in the middle of this demand wave. One highlight from the interview was her mention of AMD's friends at Oracle. Oracle is choosing AMD chips because of their price to performance ratio. In other words, AMD isn't just competing, it's actually outpacing rivals on both performance and cost. That's a strong competitive edge when customers like Oracle, who have massive AI workloads, are making decisions. The long-term vision is that now a lot of investors and analysts often focus on the next 1 or 2 or even 3 quarters. They ask, where will revenue be in the next 3 months? But Lisa Su made it clear on this question that this is a long-term trajectory for the whole market and the whole sector. So yeah, she stressed that AI is much bigger than just the short-term numbers. For her, compute power is a way to unlock intelligence for businesses, and AMD is building the foundation for that long-term growth. The interview asked about concerns raised by people like Sam Altman, whether we might be in a small AI bubble at this time, but Lisa Su's response was clear. She expects acceleration in AI demand. Not a slowdown, there's simply too much real-world demand and it's still growing. She also highlighted the importance of keeping America in the leadership position for the AI stack, a strong geopolitical and strategic angle. And of course, the hot question, why not just buy Nvidia? Lisa Su's answer was sharp. The AI market is big. The world wants options, not one-way street. That's critical. It means customers don't want to rely on a single supplier. They want competition, they want choice, and AMD is the strongest alternative in this space, in my opinion. A little bit about the additional market context and chart. So now, to be fair, AMD shares have recently faced some pressure. We'll take it to the 5-year chart. Analysts at HSBC lowered their price target, even though they still keep a buy rating at $185, which is still a lot of nice upside. Their main concerns: geopolitical challenges that could impact growth, and the fact that Broadcom was mentioned as a fourth major player in the AI hardware race. That Broadcom announced a fourth big customer that could question the position of AMD's second player in this semiconductor world, besides Nvidia. So that announcement caused some analysts and investors to question whether AMD really holds a solid second place behind Nvidia, said before, in the semiconductor world. Here's my personal view. AMD is still executing extremely well. Their price-performance ratio is unmatched, and that makes them one of the most attractive second options in the massive AI market. The growth story is only at its starting point, and yet critics are already nitpicking over small details. As many AI leaders have said, the market is very huge. There's enough room for multiple companies to grow, win customers, and profit with AMD's price quality advantage. I believe they are positioned in very strong light when you look at the chart and consider a long-term opportunity. AMD actually has a more attractive potential performance as stock price, and rather than many of its peers. So, by closing this video, I first want to mention that why AMD remains one of my core positions and why I'm confident holding it into 2025 and beyond. In the next part of this video series, we'll take a closer look at my older heavyweight position, SoFi Technologies, and where I think this still has room to grow in the next video. But having said all of that about AMD and my positions, this is, by the way, the chart. I will not go too much in depth for this. I will actually close this one. I will go just into these two things I want to show you guys. I will probably link this video in the description, because otherwise this video will be too long, and you can actually just look at the video, but it's not really necessary because I literally wrote everything down from the video and told you guys. But of course you can still watch it. Link is in the description, or you just look it up. It's very recent. So this is the news title on MarketWatch from AMD, and why it fell sharply last Friday, a week ago, from the news of Broadcom that it announced that it was adding for its customer artificial intelligence chips as a sign continued demand for AI chips, but perhaps not in the way AMD investors may hoped. But this, in my opinion, is just a bunch of, sorry that I'm saying it, but crap. The market is too big to just decide this company on its future by one client that's been added at another company. That's just too much of crap, in my opinion. Sorry that I'm saying that. So also about the Oracle news, which is more recent. This was actually a lot about that Oracle just delivered some news for Nvidia, AMD, Broadcom. It was purely about what data center revenue, how it rose so sharply, that its remaining performance obligation rose by remarkably 259%, etc., etc. The extra 10 billion year over year. A lot about that, but what it meant for Nvidia, AMD, Broadcom, Micron is that demand for Oracle's data center capacity has outstripped supply for the last couple of years, but never by this magnitude. Oracle will have to build new cloud infrastructure at a rapid pace to convert its enormous RPO into revenue. That will require it to make substantial capital expenditures, which will mean billions of dollars flowing to companies such as Nvidia, AMD, Broadcom, and Micron. In fact, in a conference call with investors last week, Oracle CEO Kash said her company could top 35 billion during 2026. That was substantially from the forecast of 25 billion, so that's about 10 billion issued just 3 months earlier, highlighting how quickly demand is ramping up. Nvidia and AMD are one of the 2 world's top suppliers of data centers GPUs, which are the primary chips used to provide parallel processing power for AI development. Therefore, they will be among the biggest beneficiaries of Oracle's exploding capital budget. But Broadcom's AI accelerators, more specialized types of parallel processors, are rapidly growing in popularity because they can customize the suit to the needs of each customer, so they offer more flexibility than GPUs. So that's a bit about what I want to talk about this one. So that's that, and this is a video you can look at. So I want to thank you guys for watching this video, and I'll see you guys later.